from the requirement.
Yeah, please go ahead.
You are required to A. Explain life cycle costing and state what distinguishes it from traditional costing technique. Then B. Calculate the cost per unit over the whole life cycle and comment on the price to be charged. The question proper.
Go ahead, please.
Tade- Tedesco Limited manufactures compact disc. It is planning to introduce a new model and production will begin very soon. It expects the new product to have a life cycle of 3 years, and the following costs have been estimated. Year, year 0, year 1 to 3, all figures assumed to be correct. Um, Please, can you scroll?
Okay. Now, all figures are assumed to be correct.
Yes.
So, the first question, what distinguishes life cycle costing from the traditional cost? Yeah, what distinguishes it? What is life cycle costing? Yes, this is a typical example. This is a typical question, not example. This is a typical question on when I say it after a class that someone should give us an overview of what we did in the previous class. This is the exact thing the question is asking you. So, what did we discuss on life cycle costing? Please go ahead and speak. Go ahead and speak. You're not seeing what is discussed. Please, not seeing what is discussed. Are you
You
sure you
said
don't
that
understand? So, someone should take us through life cycle costing. What do you understand by life cycle costing?
for the life cycle, you said that life cycle it differentiates the cycle of products at each stage of production, and you said it includes the introductory stage, the growth, the maturity, and the decline. Then for the introductory stage, you talked about like marketing and advertising of the product. While for the growth, you talked about the sales, like promotion, sales and promotion. Then for the maturity stage, you talked about that sales is constant. Then for the withdrawal, the sales start to like fall. Then the benefits, you said it guarantees decision making, it reduces is it break even point. You said it reduces break even point, sha.
Okay, thank you for that. Do we have anyone else? Anyone else? Do we have anyone? Who else was in the class?
Hello, good evening. Okay,
Yes,
let me
ma.
just add my. I know last time we discussed about life cycle. Can you hear me?
Yes, please. Go ahead, please. We can hear you. Hello.
Okay. Okay. So we talked about life cycle costing, and we said it was. Can you hear me?
Yes, we can hear you.
Oh. Can you hear me now?
We've been hearing you since. Go ahead and talk to us.
Okay. So we talked about life cycle costing, and I I know we said it was said to be the cost of product from the production stage to the demise of that product. And then there were various stages of life cycle we talked about. We talked about from the development stage, the introductory stage, the growth stage, maturity stage, and then the decline stage. We said the development stage is where the product is not earning revenue, but high level of costs are usually being incurred in that stage. And the introduction stage, we said it's the period of high business risk and with little revenue. Growth stage, we said it's where there is a rapid increase in sales, and then the product begins to make profit at that stage. The maturity stage, we said it's when the rate of sales growth slows down due to introduction of similar products in the market. In the decline stage, we said it's a stage in which the product is losing popularity in the market. It's also like a decline. We talked about the various benefits of life cycle costing. We talked about ways to maximize return on the product life cycle. We talked about life cycle costing in service industries, customer life cycle.
Thank you for that. Yes, any other thing, please? Do we have any other thing? Anyone else with any other thing? So for those who were not here before, right? Yeah, life cycle costing itself has to do with what's the cost of a product throughout its whole existence, starting from the development stage up to the withdrawal stage. All right. Yes, we discussed that. That is, what is the cost of that product at each stage, right? The research and development stage, we talked about that, and we talked about the attributes, the characteristic of costs that we can have at each stage, right? Then, so the development stage, research and development stage, the introduction stage, what are the costs, what are the revenue, what are the attributes of the costs there, what are the major costs you incur, right? So, do we have any profit there? No profit at the introduction stage. When your business is growing, that's when your revenue starts increasing. As your business is growing, you're still spending on advertising. There are some costs that you still keep spending at every stage, right? Now, when you get to maturity stage as well, there is your cost reduces at a very high point, right? And under this, what do we call it? BCG, Boston Group Technique, Boston Consulting Group, BCG. Yeah, that maturity stage is where you have the cash cow. For those of you who have done uh, the BCG technique before, just like I told you, I like to imagine them together and then try to minimize what I put in my brain. Do you understand? So that's it. Then also, you start withdrawing, right? Now, before you start withdrawing, you first decline. So when the products decline, what happens there? What are the things you should note there? Okay. Then the last will now be that uh, after you have declined, what happened? You what they call it withdrawal. And I told you that in your withdrawal stage there is a cost as well, right? The cost of dismantling the not the products now, cost of dismantling the sites and all of that. All the costs you incur, right, are the costs you are to put into your life cycle cost. You determine this cost from the beginning, right? So what differentiates life cycle costing from other traditional techniques? Yes, what differentiates it? are those things? Let's say, for instance, in terms of cost, what are the costs that life cycle costing focus on that other traditional methods might not? For instance, I believe uh, pre-operational expenses, many of us only saw it in, what do we call it? Pre-operational expenses, we see it in our FR,
Training course.
right? So our pre-operational expenses, we see it in our FR. We don't take care of it. And even in FR itself, it's not meant to be there, right? So that's it. So what are the costs that are peculiar? Someone mentioned training costs. Yes, training costs will not be in your cost of in your other traditional method,
Yes,
right?
sir.
There are some of the trainings
We
you will
have
see.
training course, machinery course,
You have
production
machinery cost,
course.
yeah, production cost, you will see it, definitely. You see production cost. Production cost is a
Can we,
labor cost, but you will
can we
not see
also
your
say
research and
market cost?
development cost. Sorry? Your research and development cost, you will
Research
not
and
see.
development cost.
Yes, you will not see that, right? Then what else do we have?
Working
Cost of
capital.
acquiring technical data.
Yeah. So all those costs now. Now another thing is that you see all those costs, even the pre-operational expenses, your fixed cost will just be fixed. They will just identify the fixed cost for a period and classify them in usually you just classify them as a single cost, right? But for life cycle costing will tell you that no, your fixed cost is different. For your fixed cost now, what your fixed cost for year one is different from your fixed cost for year two. Your non-current asset for year two is different from your non-current asset in year five. Am I right? So traditional costing will separate them for you, right? And again, traditional costing will not, but life cycle costing will separate them for you, right? And don't forget, in all of this, what is the essence of studying life cycle costing in the first place? What's the essence? Hmm? What's the essence of life cycle? What are we doing in life cycle? What are we studying in life cycle? Yes, anyway, what do we study in life cycle? So the essence of life cycle costing is to consider the product from the from from the beginning to the end throughout the life cycle of the product. The traditional costing will not do that. Do you understand? The traditional costing will not do that. All the stages like the research and development stage is not there, right? Introduction stage is not there in all the other traditional ones. The withdrawal cost is not there under your cost accounting. The only place you will treat your withdrawal cost is under taxation, where we have cessation rule and you have to pay. And that was even before. According to the new rule now, there's no extra cost cessation, there's no extra cessation costs. Do we understand? So these are what we have. Do you understand what I'm saying? So life cycle costing will bring all these costs. Those ones we have in traditional costing,
Yes.
those ones we don't have in traditional costing. Life cycle costing will bring out all of them in stages at different level, at different lifespan. Alright? So that's what differentiates it from others. Now calculate the cost. Please, are we good with question 1A? Question 2A. Are we good? Can we go for the second question? Can we go for the second question?
I've not seen the question.
What have you not seen? The question we are solving. Did you say you've not seen what we are solving?
Yes, sir.
Wow, that's tough. Please, who else has not seen what we are solving? Who else has not seen it, please? Yes, who else has not seen it? Nobody is talking.
I can
We are
see.
seeing it.
Yeah, we can see it, sir. I can
Please,
see it.
I haven't seen it. Okay, it's showing
Maybe it's
now.
your network.
It's
We
showing
can
now.
see it here.
Log out and
Shall we proceed?
Yes, sir.
yes,
Now,
sir.
question 2 is saying that we should calculate the cost per unit over the whole life cycle. Cost per unit over the whole life cycle. So what are you supposed to do now? When you have to do cost per unit over the whole life cycle, it means you need to give us the cost for each of the life cycle, all the costs that will be incurred, right? When you get the cost, divide them, right, by the number of units that will be produced over the whole lifespan as well. Do we understand? So that's what we have on this life cycle. So what are the costs given to us? What are the costs we have here? Now, are we together, please?
We are together, sir.
Okay, so we have year 0, we have year 1, year 2, and year 3, which means that the product will only spend 3 years with us, right? Am I right? Now, instead of this year 0,
Yes.
okay, I just hope there is no error in this tension. Now, in the year 0, nothing. They are just telling us about the items we have there, the figures, right? Now, you have 50,000 units to be produced and sold. Don't forget your sales volume, your sales in all budgets you are preparing, your sales comes first, right? Your sales comes first. Now, the unit produced is 50,000, 200,000 in year 2, and 150 in year 3, right? Now, what is the variable cost? We have the price per unit given to us. This is the selling price, 900 naira, right? We have the research and development cost of 1.7. We have the variable cost to be 300 naira. Are we together, please?
We are together, sir.
You can see
Yes,
what I'm
sir.
saying, right?
Yes, sir.
Okay.
Yes, sir. We can see it.
Yeah. So we have the variable cost to be 300 naira, and the unit produced is 50,000. Am I right? Year 2 is 250 naira, units produced is 200,000. Year 3 is 250 naira with 150,000 units, right? That's the fixed cost. I mean, the variable cost. Your fixed cost is always fixed. Yes or yes?
Yes. Yes.
Now, this is our variable production cost. We have the variable marketing costs as well. We do the same thing, 50 naira times 50,000. Is that not how we have to do this thing? For your variable cost now, you have
Yes,
your
sir.
variable cost per unit multiplied by the number of units. Is that not so? Yes. Right? Now you do the same thing for your distribution cost. That means we are done. Am I right? Or is there anything, is there any technicality in this question? Is there any technicality we see here? Hmm? Is there any technicality we see here? Anyone?
Sir,
Yes,
good
ma'am.
evening, sir.
Good evening.
Yes, sir. So I think maybe you should do the calculation.
We
When
will
you are
do
doing
it.
it, you
You know we
understand it
will do it
better.
definitely. We will do it.
Okay.
But you seeing the question, you need to identify the problem because when I'm solving the question, I'll not go deep like this anymore. So let's start.
Oh, okay.
So that now, what date is this again? November 2016, question what? Question 2.
Question.
I believe you guys can see my screen, right? November
Clearly,
2016,
clearly.
question 2. What's the name of the account? Are we giving the name of the company? Adesco Limited, right?
Yes, yes. Tadesco Limited.
Now, Taresco Limited has different stages, right? So what do we have? What do we have to compute, please? What do we have to compute? Life cycle costing, right? Cost per unit. So what is the life cycle cost? Computation of life cycle cost.
Addition of all the cost elements that we have.
Yeah, sure.
So we have the research and developmental costs,
Now, for each
production
stage,
costs, marketing costs, production costs.
thank you, sir. So for each stage now, we have the cost given to us for each stage. Now, you need to be careful with one thing. The question says calculate the life cycle cost per unit. If you started your own with sales, you are wrong. If you include sales in your life cycle cost, you are absolutely wrong. Do you understand? Sales is not a cost. Life cycle cost is not talking about the sales. You only identify the sales at each level. Life cycle cost, except the question is asking you for the total profits throughout the life cycle. Aside that, please don't include your sales. All right. Now, what are the stages we have? Yes, we have research and development, right? We have the research and development cost. We have the production cost, marketing cost, and distribution cost. Am I right? Nobody's answering.
Yes.
Yes, I'll take it as yes. I believe you heard me.
Yes, sir.
Okay,
Yes,
so
sir.
now let me have my figure here. My naira should be in thousand. I think I can do that, right? Yes, the question is in millions, so I should be able to do that. Now, the first thing we have is research and development, right? That's our first cost. R&D. What's our research and development cost? For the whole life cycle, 1,700 plus 180. Do you understand? 1.7
So,
million plus 180,000. Let me write it here. 1,700,000 plus 180,000, right?
Yes, sir.
Yeah. So what does that mean? Did you say things saying that it will soon go off?
Yes, 15
yes, sir.
minutes.
Okay, don't worry. 15 minutes is fine. The thing should stop trending on screen, please. 15 minutes, no problem. Let it go off too. We'll set up another one. Yes. What do we have, please?
1,880,000.
1 million
1,880,000. 1,880,000. Yes. What else do we have next? Production cost, right? We have the variable production cost. So what's our variable production cost? Yes, how do we get our variable production cost? Let me do
Write
that
a
workings,
million.
right? Let me do the workings, something start. Variable production cost. And I can decide to do it here. Now my variable production cost I have for year one. What does year one say? What's my variable cost? Variable production cost 300 naira times 50,000, right?
300.
Am I right? Do you understand what I'm doing?
Yes, sir. We understand, sir.
Yes.
Okay, so let me bring this one here. 300 naira times 50,000. 50,000 units, please. Right? What does that give us? 350,000 for year one. Year two is what, please?
Your
250,000.
one is 15 million.
Sorry, year one is leave the figures. I will come to it. Year 2 is 250 times 200. Year 3 is 250 times 150, right? Am I right, please?
Yes, you're right.
Yes, sir.
Okay. And year 3. So year 2 is 250 times 300,000, right? Is it 300,000 or 200?
200.
Okay, 200k.
Okay.
And year 3 is also what? I think 250 also times what, please?
250 times
150.
150.
150k.
150.
Now, this second one is not in naira, it's in units. Yes, what do we have, please, for the three of them? 3 times 5 is 15, right? 15, 0, 0, 0, 0, 0, 0. That's 15 million.
Yes.
Am I right?
Yes.
Okay, so since I'm using 15 million, I can use 15,000. Yes, what else? 250 times 200. 25 times 2 is
50.
50,
50
right?
million.
50 million, that's
50
50,000.
million.
Yes, 25 times 150. 25 times 15 is what, please?
37 million 500.
7 million.
37 million 500.
So I'm using 37,500 for my own, and that gives me a total of what? What's the total? 102,500, right? Yes, what else do we have? What else do we have, please?
Marketing
That's all.
cost.
That's
102 500.
Yeah, I've done that. Next one we have is
102,500.
we've done that. Now we have fixed production overhead, right? Fixed production cost. Yeah, what's the fixed production cost we have in the question? We have 5 million, 5 million, and 5 million, right? 5 times 3 is what? 15 million.
15,000.
Next, what do we have? We have our marketing cost next, which is also in two. So marketing cost, what do we have on it? We also have for year 1 to 3,
50,
right?
50 naira
Yes.
and 50,000.
50 million times 50,000, 50, 40, and 30, right?
Yes. Yes, sir.
50 naira times 50k, 40 naira times what? 200k, right? Repeat
30
after me
times
one more time.
150.
Say it now. 30 times what? 150k.
150.
Who does not understand this, please? Anybody? Nobody. Okay, so 50 naira times 50,000 will give us what? 25
2.5.
to 500,000.
Yeah, please, can you mute your mic? It's interfering with the class. Yes, please, let's mute our mic, please, please.
Okay, you can mute, please. 2,000 times 40 should give me 8 million.
8,000.
Yes, 8,000. Thank you. 150 times 3 should give me what? 4,500. Am I right?
Yes, sir.
Okay, so what do we have in total? 15,000. Yes, what else do we have, please? After marketing costs, we also have distribution costs, right? What's our distribution cost? We have distribution cost for year 1, 2, and 3 as well, right? Distribution cost is how much? 10, 10, 10, 10 naira. 10 naira, right? Times all these three. Please permit me to steal them. This is 10 naira. You understand what I'm doing, right? If your background is not noisy, please you can unmute yourself so we can do this together. So 10 times 50 will give us 500,000, times 200 will give us what, 2,000, right? And this from 50 will give us 1,500. Am I right? And that gives us a total of
Yes, yes.
4,000. Next, what do we have? We have the fixed cost as well, right? what's the fixed marketing cost? What do we have it as? What's the fixed marketing cost?
1,900.
Hmm?
So the total is 5,700.
Total is
Under fixed
5,700,
marketing
right?
costs, we're having 3 million, 2 million,
3 million, 2 million, and 2 million.
7
That's
million.
7 million.
That gives
That's
us
7 million.
now 7 million. So 3 million, 2 million, 2 million, 7 million. Now, see, if you observe what I am doing, because I don't want to miss out a question, please, we said 7 million, right? Before I forget. Now, if you observe what I'm doing, I'm taking all the costs, breaking them out into fixed and variable costs, right? Now, the question did not ask you a certain way to present your answer. You can choose to combine all the variable costs together and do them first. Then you go to fixed costs and do them. Do you understand? The question is not asking you giving you a certain classification mode. Do you understand now?
Yes, sir.
Aha.
Yes, sir.
So, but someone like me, when I know that, I can easily skip question. Someone like me, I don't know if you have observed that in me. I like to take them one after the other, except where it is required to be classified. Yes, I will. All right. So that's that. Now we also have the distribution cost. Have I written distribution cost before? Okay, yeah, we have the distribution cost. What else do we have? We also have customer service cost per unit.
That's a good cost.
That's also a variable cost, right? Per unit. Am I right? Per unit. So what do we have on that?
30 naira, 20 naira, 20 naira.
40 naira.
30 naira. 30 naira
30.
times 50,000.
Okay, I'll just write 30 naira. Second one
Then
is
20
20
naira.
naira.
20 naira. Third one is 20 naira.
Okay. So what do we have is times 150. I believe we all know what is there, right? 30 times 150 will give us what? Any times
30
50
times
will give us
50.
5
15,000.
times 50 times 50.
Will give us 1,500, right?
500, yes.
20 times 200. 2,000 times 2. 4,000, right?
That is
That's
4,000, yes. 4,000, 4,000.
and
The
then
next
what
one,
else
please.
too?
The
After
last
this,
one is
150.
3,000.
The last
150.
one will be 3,000. 150
Yes.
times
Yes.
2, 3,000.
Yes, 3,000.
What do
3,000,
we
yes.
have in total? 8,000.
7,000.
I have
8,500.
8,500, please. Is there any other costs that we have in this question that we've not taken? No.
No,
So
no.
Yes,
if
sir.
there is no
Please.
other
What
costs,
of that fees cost? Okay.
The fixed distribution cost.
yeah, is here. Any
No, the
other
That
cost?
one,
1.9 million.
that
The
one is
1.9 million.
Which
market
one?
distribution. Fixed market distribution cost
Where
is
is
the
it?
one with 7 million.
1.9 million is there.
Which one is
Well, we have
1.9
one
million?
fixed distribution cost.
Under,
Distribution cost.
Okay, we've not done fixed
yes.
distribution
If you
cost.
not,
So
we've not done it, yes.
Is it not this? Oh, so how did we get to marketing cost? So I did distribution cost before marketing, before fixed marketing. So you can see the mistake I already told you about. It's easy for me
Yes.
to make that mistake. So ordinarily, I was supposed to do fixed marketing cost here. Then distribution cost will now come below, right? And after my distribution cost, I will now have fixed distribution cost, right?
Yes, sir.
What's our fixed distribution cost?
5,700.
So 1.9 times 3. 19
Yes.
times 3 is 57, right?
That is 5,700.
5,700. Any other thing that we've not added? Any other thing we've
That's it.
not added? So in the absence of any other thing, What's our total? Average is 159,580,000. Someone else should please confirm.
Yes, correct.
Well, it's Excel, so it's most likely to be correct. Right now, this is the total life cycle cost. Right? This is the total cost we will spend all through the lifespan of this asset, of this product, all through the life of the product. This is the cost we will incur. Do you understand? Now, if this is the cost, check the question. The question is not asking for the total life cycle cost. The question says life cycle cost per unit. So what's the total number of units we have produced? We'll be producing. This is 50, this is 200, this is 150. That gives us
400,000.
400,000 units. So this cost will now be life cycle cost per unit. Will now be 159,580, right?
Yes.
Divided by what? 400,000 units. And that gives us what?
0.39, 0.398.
Hey, so sorry. I did not put this in million. 159,580,000. Whatever you've gotten, multiply it by 1,000, sir. What do you have?
398 naira 95 kobo.
398.95.
Kobo. Yes.
So this is the cost per unit. Cost per unit of your life cycle product. Any question from anyone?
Yeah.
Go ahead, please.
Please, how do we get the 400 units?
So the 400 units is the addition of all the costs. I mean, all the units produced. Year 1 we are producing 50,000. Year 2 we are producing 200. Year 3 we are producing 150. The same way we have added all our costs together. 1,700 plus 180, right? 5 million
Yes,
plus
sir.
5 million plus 5, right? This
Okay.
plus this plus this. Then for the variable cost as well, 300 times 50, right? 250 times 200, 250 times 150. And then we added them together here, just like this. A, B, and C, added them together.
Required. Prepare calculations to show the total direct labor cost of products for each of the 4 stages of product life cycle. B. Assuming that there is no experience curve in relation to the product's direct material cost, prepare a statement that shows the profitability of the new product for each of the 4 stages of the product life cycle, individually and in total for the product life. C. Assuming that the direct material experience curve applies, calculate the average direct material cost per batch that must be incurred in order for the company to meet its ARR target over the life cycle of the product.
That's accounting rate of return, right?
Yes, sir.
Okay.
D. Discuss the concept of life cycle costing and its effect on the product pricing strategies at different stages of the product life cycle. Use the GeoMath limited scenario to illustrate your answer. The question proper.
Okay. Go ahead, please.
GeoMath Limited, a manufacturing company, has developed a new product. This requires an initial capital investment of 5 million naira. At the end of the product life, The capital equipment is expected to have a value of 3 million naira. Jumat Limited requires an annual rate of return of 20% on its average investment on products of this type. The new product has an expected life cycle of 1 year before it will be replaced by a more advanced production. The new product will be manufactured in batches of 1,000 units using a just-in-time production system. The first batch is expected to incur a direct labor cost of 100,000, but a 75% learning curve is expected until the cumulative production equals 30 batches. Thereafter, each batch is expected to incur the same direct labor cost as that of the 30th batch. The expected direct material cost for the first batch is 50,000 naira. However, an experience curve is expected to apply to the first 10 batches produced. Thereafter, no further savings in material costs per batch are expected. Other production costs are expected to be 10,000 naira per batch.
Yeah, sales.
Okay, sales. Sales of the new product are expected as follows for each of the four stages of the product life cycle: stage, unit, then selling price per unit. All figures assumed to be correct. Note: the learning index for a 75% learning curve is -0.4150.
That one
Required:
has made it easy for you. So you don't need to be calculating your B again. AX raised to power B. They've given you the learning curve. Right? So you're saying that at 75%, though, you can calculate it to confirm. Right? If it is 75%, what do you have? It will be log what? What will be your B?
75 over log 2.
Sorry?
Log 0.75.
Log what, please?
Log
Log
minus
0.
0.75 over log 2.
Minus what? Sir, what did you say?
Log minus 0.75 over log 2.
Where did you see the minus you
Oh,
have put
sorry.
there?
Log is 0.75 over log 2.
Ah, please, let's be careful though. If you are doing that minus, that means your answer will be in positive. So the question is, the log is log 0.75 divided by log 2. And that should give you 0.415. You can confirm it, please. You can confirm.
That's correct.
Okay, so that means they've done that for you. Now, if you look at this question is not only testing learning curve. This question is testing life cycle costing. It's testing learning curve. What else is this question testing? This question talks about another thing.
Investment appraisal.
Investment
ARR.
appraisal, yes. ARR of investment appraisal. What else? It talks about
Limiting
JIT.
factor.
Limiting factor. It talks
Okay.
about JIT as well. Just in time.
Just in time.
Any other thing? Is there another thing we have here? I think that's basically all right. Now, let's take the question one after the other. So the investment appraiser is 5 million naira initial outlay, right? And at the end of the product, your expected value, what do you all call that expected value? Residual value, right? Your
Yes.
residual value is 3 million, which means depreciation there is 2 million.
Yes.
And the product is for how many years? Eh? How many years is the product?
One year, 1 year.
1 year.
Yeah.
1 year.
1 year.
One.
1 year. Your ARR, accounting rate of return. Please, if you are raising up your hand, just go ahead. I told you, right? If you are raising up your hand, it means I should open this thing and be looking at. Mr. Prince, please go ahead, please. Just go ahead and speak to us. Mr. Prince, are you there? Okay, so we can go back to what we are doing. Yes. So 1 year
So
is
the class is not showing that you are recording it too.
and it will not show, but I'm recording. It will not show, but I'm recording. Yes, I'm
Okay.
recording.
Okay, sir.
Yeah.
All right, thank
Now,
you.
the ARR accounting rate of return is 20%, right?
Mm.
And it's on its average investment type. Now, for production, our introductory stage, what happens in our introduction stage? Do we have anything on the introduction stage? At the introduction stage, do we have anything? So yes, we have 10,000 for selling price. Now, what does the question ask us to prepare? What is the question asking us to do? Prepare a calculation to show your total direct labor cost of the production of the product for each of the four stages. Direct labor costs. Hello. If you look at this question, they give us selling price and unit. Now, under production, if you look at this line, they gave us costs on material as well. And there is also a learning curve on the material. Can you see where I have highlighted? Can you see where I have highlighted, please?
Yes.
Yes,
Yes,
sir.
sir.
Yes.
Now,
Yes, sir.
Yes.
the question is asking you on labor. Some of you will get to the exam and you'll be like, am I using labor or material? Number one, you should know that your what's it called? Learning curve is usually on labor. That doesn't mean it can't come on material. It can come on material in terms of the cost you incur on material usage, not the material price. So material usage. The material usage is what I will now measure by the quantity times price to give me the material cost. So the question is on labor. This A, as far as we know, the A question is on labor. Alright? So now let's focus on our labor. The first batch is expected to incur a direct labor cost of 100,000, but a 75% learning curve until 30th, until the 30th batch, right? Until the 30th batch, which is from batch 1 to batch 30. We have a learning curve, right? Am I right, please?
Yes, sir.
Now, if the first batch is 100,000, that is our A. Abi, our A, if you are doing y equals to a plus bx, our A is the first batch, cost of the first batch, right? Am I right, please?
Correct, sir.
Yes, sir.
Yes, sir.
So which means our A has been given to us as 100,000. Our B has been given to us as minus 0.145. 415. Right? Is that not B? Hello.
Is it the percentage of the
Yes,
learning
sir.
curve?
Yes, sir.
Yes, that is B now. B is the percentage
Okay.
of the learning curve. The
All
learning
right.
index is B.
Okay.
Right? Now the question says prepare calculations to show the direct cost of the product for each of the four stages. Each of the four stages. Now, how many batches do we have? They gave us 30 batches, right?
30
Our
batches.
learning curve will
30.
stop. Our learning curve will
30.
stop at 30th batch.
30. Dash.
That doesn't mean production will stop at batch 30. Learning curve will stop at batch 30, the 30th batch.
I think it's batch 10, sir. That line that you
No,
highlighted
no,
in
no.
the first place.
No, no.
You say an
We are,
experience curve is okay.
this
The
is
expected direct material cost for the batch is 50. However,
that
and
is
okay.
material. I mentioned this that we are not focusing on. The question is asking us for direct labor,
Labor.
not material. I mentioned that. This is
Okay.
Yes.
Okay,
material.
I get it now, sir.
The question is asking for
Sorry.
labor. No, 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 it's fine. Now, how many batches are we preparing?
Batch 30.
How do you
30
know it's 30?
batches.
30.
Now you need to be careful at what you are saying. Look at the question. What do we have here? In production stage, they have 10,000 units,
1,000.
right?
Yes.
In growth stage, they have
Growth
30,000 units.
30,000.
In maturity stage, they have 60,000
60,000.
units.
Decline.
Now, don't forget, this unit that you're seeing in 60,000, how many units make one batch? How many units make one batch?
1,000 units. 1,000 units.
1,000 units.
Make one batch. Does that make a sense?
Yes, sir.
Now, we want to know what the cost will be. Now, at the production level of 10,000 units, we can easily get our costs. Don't forget, the question is asking us for learning curve for each of the stages. Each of the stages. Right?
Yes.
So, what is our cost in the first batch? I mean, in the first stage? 10,000 units is
10,000 units.
right? So the question is simply asking us that what is for 10,000 units? What's our cost for 10,000 units? Second batch for 30. What is our cost for 30,000? 30,000 units.
Okay.
30,000 units will be the 30th batch, which means we will still enjoy learning curve up to that 30th batch. Is that not so?
Yes.
Hey, somebody is not answering. We will continue to enjoy that learning
Yes,
curve
sir.
Yes, sir.
batch.
Yes, sir. Yes, sir.
Sorry,
So
sir,
please,
please. I'd like to ask.
yes, sir. Go ahead,
So
sir.
the 30,000, is it exclusive of the introduction or inclusive of the introduction of 10,000?
I don't
30,000, is
understand.
it inclusive of the introduction?
Ah, is
Okay,
it
so you mentioned
exclusive?
that
Wait, the
30,000
30,000, is it exclusive of the production or inclusive? Is that your question?
introduction, the introduction unit,
Okay.
is the 30,000 of the goods unit. Does it include the 10,000 of the introduction unit or exclude the 10,000 of the introduction unit?
I like
Because
that
if
question.
that is it,
Somehow I like the question. Now, within 1 year, we are producing all these batches. Now, your growth stage is independent of your introduction stage. That's why the cost you spend on growth stage is different from the cost you spent on introduction stage. So for your question, if we go to the last thing we did, this question, did we had year 1 to year 2 together, or did we say that year 1 has already incurred 15,000? That means year 2 is the difference between 15,000 and 50. I don't know if anyone understands what I'm saying.
Can you
If
come
it is
again, sir?
incremental, his question now, I don't know if you guys got his question. His question is that this 10,000 given to us at the introduction
Okay.
stage, is it that at the growth stage they added this 10,000 plus additional 20,000 to make it 30? Then
Okay.
at maturity stage, we already have 30,000. We now added
At 30.
30,000
30.
to it.
Make it 60.
Now, this is where you will know the answer. If you have produced 60,000 and you are saying that at the decline stage you have 30,000, the remaining 30,000 difference between maturity to decline, did you throw them away? If you are saying incremental, now if I already have 60,000 units with me and at the decline stage I said I have 30,000, am I saying that I threw the remaining 30,000 units away? No. So it means that
No, no.
each of the units sold are independent of each other.
No.
In the same vein that each of the costs we incurred in year 1 and year 2, we added them together to give us the
Together.
total. So introductory stage will be added to production, to growth stage will be added to maturity and decline. If you look at the last question we solved, we added the whole unit, production unit together
Together.
from year 1 to year 3.
Yes.
Sir, do you understand now?
All right, thank you, sir.
Yes, sir.
Yes, I get it. Thank you.
Shall we proceed, please?
Yes, sir. You can go on, sir.
Okay.
Yes,
Now,
sir.
Yes, sir.
okay. Let me use. No, let me just open another tab. Now, for this one, what's the date, please? November 2018.
2018.
Question what?
Question
Question 4.
4. Question 4.
4.
Yeah.
Question 4.
Question 4. What's the name of the company?
Question 4.
What's the name of the account? Do we have the name of the
Julmat
account?
Limited.
GMAT Limited. Ju.
Jumat Limited.
Jumat. Okay. Is it ART?
Julimat.
JULMAT.
Jumat.
M80.
MAT.
And Jumat. Jumat Limited. All the best for Jumat. Now, Jumat Limited. What is our cost? So, the A question is saying that what is our cost for what? The whole production stages, the whole life cycle stages, right?
Yes.
Sorry, I'm pressing something else. I thought I was here. Total cost. Total direct labor cost. So the first stage we have is what? Introduction stage.
Introduction.
Introduction.
Production
Now,
state.
the introduction stage, how many do we have? We have 10,000 units.
10,000. 10,000
10,000.
units.
10,000 units.
Okay, so if we
Units.
have 10,000 units, what will that be? Don't forget, since we don't have it in multiples of 2, what are we supposed to use? Are we using tabular method or formula method?
Formula.
Formula method.
Like straight formula method. So what will be our formula method now? Y equals to what? AX
A
raised to
plus
A
B.
plus. Yes.
AX raised to
A
power.
plus. Yes. Sorry.
It's not A plus AX.
Y equals to AX
X raised to power B.
raised to power B.
Raised to power B. Don't forget your B is raised to power. If you are using
Okay. Okay.
Microsoft
Yes.
Word, I think I can write that using Microsoft Word. So we are not using Microsoft Word here because I like to put them in what do you call this? Okay, so that's it. Yes, what is our Y? Y is what we are looking for, right? Am I right, please? Yes, what is our Y?
Y is what we are looking for.
Yes, what is our A? Our A has been
1,000.
given to us as
A
what?
is 10,000.
10,000.
10,000 units.
1,000. It's
No,
1,000.
1,000
1,000.
units.
1,000 units. A.
No, you are wrong.
Okay.
A is the cost
1,000.
of the first
1,000.
batch. A is the
10,000.
first batch is expected to incur a labor cost.
10,000.
100,000.
Before
100,000. Okay.
the cost of the first batch, the
So,
cost of the first batch is what we have to use, right? Which is 100,000. So A is 100,000, right? That means we have 100,000 multiplied by what? What is our X? X is what we are looking for, which is the 10th batch, right? Right?
yes, sir.
You don't understand how I got the 10th batch.
Is it the
1,000
introduction?
in a batch.
Please, how do you get the 10th bar?
1,000 in a batch.
Introduction
How many
stage, I mean.
batches will I produce to get to 10,000 units? If I'm producing 1,000 in a single batch, how many times?
10,000. 10. 10.
10 times.
10.
10
10
times.
times.
So 10
10 times.
times, right? Raised to power,
Yes.
raised to power what? They've given us minus 0. What?
Minus 0.
4150.
150.
0.4150.
Minus 0.4150. So So what do we have? 10 raised to power minus 0.4150. What do we have? What do we have?
We have 0.384, 0.385.
385. Put it in
Yes.
4 decimal places, please. 4 decimal
Okay,
places.
it's 0.3846.
Multiply it by 100,000.
846.
0.3846.
46.
Multiply by 100,000, right? 1,
Okay.
2, 3,
38,000.
4,
That
That's
is 38,000.
38,459.
59. Yes.
I thought you said 46.
No,
No,
38,459.
for that one. For the 10 raised power minus 0.415.
Should be 384,600.
Are you sure it's 384?
No,
It's 38,459.
38,459.18.
38,
459.18.
38,459.18.
0.18.
Now, this is the average cost, right? The average cost for the 10th batch, for all the 10 batches. Average cost for all the 10 batches, right? Is that what this means?
Yes.
This is the average cost for all the 10 batches. Average cost per unit, per batch, sorry. Right? So the total cost now for 10 batches will now be what? Will be what?
That's
38
multiplied by 10.
That is
459.18
8,
multiplied by 10.
10.
384,591.
Am I right?
Yes.
Yes.
So
Yes, sir.
why is the
384.
average cost? Let me put that. Average cost per batch. Per batch. I don't know if you understand this. So this my divided by batch. I hope you understand it.
Yes, sir.
Y means average cost per batch. And you need me to write it in full. Let me just write it in full. But this is how we write per batch. So total cost is what?
384.
384.
591.78.
592.
0.78.
Abi?
591.78.
0.78.
I'm using
78.
0.8 before. I'm using 0.80 before. That's why I said you should give me for this market 0.78. I mean 0.78, 0.80. Because look at my own. If I'm
0.78.
using 38459.18, if I'm multiplying it by
Still
10,
the same.
automatically it should be 0.8, right? So let's leave my own like this. Yes, it's the same. So let's leave it like that. So for the introductory stage or introduction stage, this is what we have, right? This is what we have for the introduction stage. Any question, please? Any question, please? Yes, go ahead, sir.
Okay, sir. Sir, this minus 0.4150, I don't know how they get it.
The question gave us. So how
Okay.
they got it is log 75, log 7 point, log 0.7575.
Any index of 25.
Yeah. Log 0.75 divided by log
Alright.
2. Log
2.
0.75 divided by log 2. That's how they got it. The question gave us. We did not calculate it.
Okay, sir.
Have you seen it in the question?
Yes, sir.
Okay. Now the next one we have, that's for the introduction stage. Right?
Yes.
Now the second one we have is what? What
Growth.
is growth?
The growth
Stage.
stage.
Growth stage.
The growth stage.
We need to end this class as quick as we can, so let's just be fast. For growth stage, what do we have?
30.
30,000.
We have
30,000.
30,000 units.
30,000 units.
30,000 units. Now, if
Yes.
we're having 30,000 units, it means we can actually calculate for our 30,000 units. Abi?
Yes.
Don't forget, we still enjoy it up to the 30,000 units. Right? Am I right?
Yes, yes.
Okay.
Yes, sir.
Yes, sir.
So for 30,000 units, what do we have? Yes, what do we have, please? Yes, what do we have? Anyone?
Um, can we add the 30,000 units to the 10,000 units? Then we divide it by the 1,000 units.
30,000 units to what?
The introductory stage.
No, we are doing
This
this
will be
separately,
40,000.
right?
Okay.
Now let's do for the what do we call it? For the sorry, someone should help me with English now. For the growth stage, what do we
Much.
have for the growth stage?
30,000 units.
We have 30,000 units for the growth stage, right?
Yes.
So the 30,000 units for the growth stage is what? The 30,000 units, what do we have for growth stage? If we are to do for 30 units, that means we also have this, right?
100,000.
Our Y will be 100,000
Okay.
times 30th, right? The 30th batch.
Yes.
Is that not so?
Yes.
So
Okay.
if for the 30th batch, what do we have?
Yes,
Our
sir.
Y will be what? Yes, what do we have as a figure? This session is
24,377.80.
34.
24.
Okay, 24,000 377.80.
377.80.
Point 80.
Okay,
80.
80. Okay, 24,377.80. Right
Yes.
now, this is for the whole 30 batches
Okay.
average cost, right? Now, the total cost for the 30 batches will now be what? Yeah, total cost for 30 batches.
Is
731,334.
As the 30.
30
Will
times
be what?
24, 377.80
Multiplied by 30.
times 30.
Times 30,
Multiplied by 30.
and that gives us what?
731,334.
731,334.
731,334.
Yes,
Right?
sir.
Okay.
Yes, sir.
Now, for the 30
Yes, sir.
batches, this is what we have. Hello. For the
We are here with you,
30
sir.
batches, hmm, this is what we have. Does that make sense? For
Yes, sir.
30 batches, this
Yes,
is
sir.
what we have. Alright? Now, at the growth stage that we have, at the introductory stage, what do we have as 10 batches? We have 384,
Okay.
right? Now, if what is the additional batch we have created here? The additional batch we have created here is additional 20,000 batches, right?
Yes.
Right?
Yes, sir.
From 10,000
Yes, sir.
to 20,000,
Yes.
right? Now, the direct
Yes, sir.
labor cost for the first 10,000, we've gotten that. We've gotten
Yeah.
the one for these 30 batches in total. Now, what is the total cost for batch 30 only? If I want to get the batch, I mean the figure for batch 30 only, what is it? What will I get for batch 30 only? Batch 30 only. What will it be? And why do I need that batch 30 only? Why do I need batch 30? I need batch 30 only because I'll use it to know
Because
what
of the
other
questions.
batches we take. Because after this growth stage, I'm not going anywhere again. It's not increasing again.
Yes, yes.
Which means every time I prepare to batch 30, I stop.
Stop.
I don't know if that makes any sense.
Yes.
No, sir, I don't understand.
Okay. Were you in the last question we did last week?
No, I was not.
And that's the issue now. So you see. So that's the issue here. Do you understand me? Now, if you were in the last question, you have gotten this because we did something like this, exactly like this in the last question. Now, when you get to batch 30, you see this y equals to, is because we are still enjoying a learning curve of what? 75%. Is that not it? We are enjoying a learning cost of 75%, but that learning curve of 75% will stop at the 30th batch. Do you understand? Now 24,000 is averagely for what we are spending from batch 1 to batch 30. 24,000. I don't know if you understand me. Hello.
Yes, sir.
We are with
I
you,
don't know
sir.
if you understand what I'm
Please
saying.
take it again.
So
Yes.
my question of,
Yes, you can go.
oh god, I don't know how to explain this again. 30th batches. Now we are saying that if you spend in the first batch, you spent 100,000. If you are preparing the second batch, you will not spend up to 100,000. You'll be spending 75,000, right? If you are going to the fourth batch, you'll not be spending 75,000 anymore. 75 times 75 will give us what? 75 times 75. 75 times 0.75 will give us what?
5625.
That means I'll be spending
I just don't.
52,250 in the fourth batch. Each of them will be 52,000, 56,250 each of the batch, right? Now, that 56,000, if I'm to produce 8, it will be times 75% of it, right? If I'm to produce 16, it will be times 75% of whatever I get. That's in multiples of 2. Am I right? Now, the cost keep decreasing until it got to batch 30. The question says that when you get to batch 30, whatever you spent on batch 30 only is what you will keep spending throughout the whole other life cycle. Does that make a sense now?
Yes, sir.
Does it make a sense, please?
Yes, sir.
Yes, sir.
So that is what we have. That is what we have. Now, you see the 700 and the waiting we get, 300 and waiting, this 731 that we got.
731.
731 is when we get to the 30th batch, right?
Yes.
Am I right, please?
You're right, sir. 30th batch.
That is the cost. What do we get if we are to do 29 batches? What will we get? For 29 batches, what will I get? I don't know if you understand what I'm saying. For 29 batches, what will I get? Now, 731 is for, let me break it down. So, this cumulative is assumed that I'm starting from zero. This 731
Okay.
I'm doing, Abi, it's
Yes.
assumed I'm starting from zero to that place,
Okay.
right?
Yes.
Now, if I am not starting from zero to that point, what will I be doing? Now, if this 731 is for this, now my first 10 batches, what did I get?
384.
Am I right? Now,
You're
it
right, sir.
means that if I got 384 before, total cost for 30 batches. Now, the total cost now, what is my total cost for 10 batches earlier?
38459.
10 batches earlier gave us 384.
59.
591.
Yeah, so it will be 384 591, right? 0.80.
0.80.
Is that what we got?
Yes.
Okay, now,
Yes,
if
sir.
that is the case, if this is what I got before, it means that this second batch, let me see if I can say less.
Mm-hmm. Listen.
Do you understand what we are doing now?
Yes, sir.
So, which means for this new batch, oh god, this thing is not taking it. Yeah. So, if I less what I got for the first 10 batches, then it means that for the new 20 batches that I prepared, these new
20.
20 batches, it's now the cost for the 20 batches is what I will get, Abby.
Yes, sir. Yes, sir.
If I remove 10 batches from 30 batches, that means I'll be getting 10 batches.
Yes.
Right? I don't know if that makes sense to anyone. What's the
Yeah,
difference
you get
between
it
Yes, sir.
20. Yes, yes.
731 plus
346.
384 is what?
346.
346, 742.
742.2.
742.
742.20.
0.2.
2.2. Yes.
Now, it means that for this second batch I am doing, the 20th batch, the 20 batches I did is for 346,742 naira or 20 kobo. Now, let's look at it this way. If 20 batches is 346 and 30 batches is giving me 731,
31.
does that make sense? Now, the
No.
first 10 batches has already taken 384. The second batch is taking 346. You can see that
Yes.
even the cost of 20 batches is less than the first 10 batches.
Yes.
So, which means this 738 is actually not for the whole 30 batches. It is cumulative of that initial 10,000 units. It's just like starting from zero. The 10,000 units plus another 30,000. Let me say it again. This 731,334 is the addition of both the introduction stage and the growth stage together. But the question is asking us for each stage. Do we understand? The question is asking us for each stage. So what did we spend on each stage? Do you understand that now?
Yes,
Now,
sir.
let me understand what we got for 29th stage. Because I know that whatever I get on 29th stage, I can deduct it from what I got on 30 stages, and I'll know what my 30 stages is.
One
I can
stage.
add my 29 stages to my 30 stages to give me 30. I can add my cumulative from
Yes.
29, 1 to 29, plus 30 to give me stage 30.
Yes, sir.
So let me take it, what I have said now, let me take it again. Now, this is the cost for 20 batches. That is the second 20 batches we did. You see, this 731.
Please mute your mic now.
Now, this
Please mute.
731, yes, this 731 is for both introduction and growth stage. Do you understand? This 731,334 is for both introduction and growth stage. That is the 10,000 in the introduction stage plus the 30,000 in the growth stage. That makes it for 40,000 units. Do you understand why?
Yes, sir.
What it means is that when we are producing, we produce the first batch, 10,000 units. We produce the second batch, 30,000 units. First batch plus second batch is what? 40,000. So this 731 is not for 30 batches only, but the second batch from introduction stage to group stage. That is what this means. Do you understand? So this cost represents intro to growth stage.
So the
Stages
cumulative
of
of the 10,000 and the
yes.
30,000 batches.
So that is what this cost represents.
Okay,
Right?
okay,
Now
okay.
this is for the 20 batches we have done. If this is for the 20
No, we
batches,
have in a minute.
what do we have for 29 batches? Hello?
Hi.
Because we have in a minute.
Okay.
Okay. Sorry, sir.
Because
Where
we
is the
end in a
29?
minute.
We end in a minute.
Oh, okay, so let's do
Let's
this
do
way,
this way,
please.
please.
Let's continue from here in our next class. Please.
Okay, sir.
Let's
No,
continue
sir.
from here. We'll start this growth stage again in our next class. Growth stage, we'll start again in our next class, please.
All right. Thank you, sir.
Thank you, sir. Thank you so
Thank
much,
you,
sir.
sir. God bless you, sir.
Thank you, sir.
Thank you very much,
Thank you.
sir.